It was on mute. Oh, it drives me crazy. There's so many mute buttons or settings to affect the audio. It drives me crazy. Okay, let's kick it all off all over again. Folks, welcome to Thursday Night Stock Charts Live. We have a 3-day weekend ahead of us. We are going to party like it's 1999. My pool is open, effective today. Brand new saltwater chlorinator. Cleaning up that pool right now. But before we begin, we got to tip our hats to Ray Liotta, passing away at age 67. Blessings to him and his family. I was a huge fan of Ray Liotta. And it's really horrible to see that he has passed away at such an early age. So God bless him. May he rest in peace. And again, many prayers to him and his family. In this show is dedicated to Ray Liotta. And the reason why I had these animals, these lizard people on, is that you get a guy, an artist like Ray Liotta passes away. Thank God he died in his sleep at age 67. And these lizard people, they're going to be here before, or I should say after I go. So not to mix them up with him. All right, let's we're going to talk about, is this rally for real? Does it have legs? Like with anything else, it comes back to the Federal Reserve. And as I've been saying, bad news is good news for the stock market, as sick as and perverse as it is. Dehydrated. So we had initial jobless claims came out today. Not good. They're on the rise. More layoffs are coming. Layoffs are just beginning. So let's bring it up. Okay. So this week we actually had a beat on S&P Global Manufacturing by a BIP. PMI miss. This is services. Durable goods, big miss. FOMC minutes. We're going to talk about that in a moment. Initial jobs claims, as I mentioned, ticked up higher. They did expect a higher read, but this is going to continue higher. Amazon's already announced layoffs. Netflix, they're just going to keep coming. GDP expanded worse than expected, or the last read, I should say. So we contracted at a greater rate last quarter than what was originally reported, because this is a revision. Tomorrow morning, we're going to get inflation data. So the PCE, that's the inflation data that the Federal Reserve generally uses, because I guess it's manipulated for their own purposes. So the PCE can move the markets tomorrow. I don't think we're going down. The reason is that A, people expect a bad number. B, it's going to be a very quiet day tomorrow. It's probably going to be an abbreviated trading day, much like today was. I mean, really, volume, if you take a look at the volume, it really at 1 o'clock, it just fell off of a cliff. And volume overall was not great today. So tomorrow, expect more. You're going to see probably a melt up in the markets. So what's going on here? Well, this is a big short squeeze. There's no doubt about it. And the reason why I'm able to say that is that volume is not great. This is not a sign that you have institutions stepping in and buying equities hand over fist because they're cheap, because they're not cheap. You know, last Sunday, I reported that the Buffett indicator, for the first time since I've been doing this show, was rated as fairly valued, yet 33% higher than historical norms. So while we're fairly valued, quote unquote, whatever that is, we are at the higher end of that range, very high end of that range. So we have further to go here to the downside. I think that we can get a bear market rally. And if we begin to see big volume bars, meaning institutions jumping in and buying equities hand over fist, well, then, you know what? Maybe the bear market's over. I don't think it is. I don't think it is. These are not in any type of order. I was so late. The pool's open. I was out there playing. Cobb Fed will start cutting in 2023 after U.S. enters recession later this year. Yeah, we're going into recession. I think Kyle is being overly generous here. I think that this GDP number coming up for Q2, we're going to be in recession. 2 consecutive quarters. That means recession. I think that we are in recession right here, right now. We don't need to wait for the print. We just need to prepare accordingly. But in the meantime, we have a date that's coming up. And that date is, I forgot to bring it up. Let's see, what did the Federal Reserve do? This week. This is their balance. Their balance sheet declined. Wow. So it has begun. Wow. Now, this report is as of yesterday. It's released after the end of the trading days every Thursday. Let's see what the futures are doing. I traded Costco earnings. We're going to make money on this one. We sold a deep out of the money strangle. That's an option strategy, and we should do very, very well on this trade. Qs aren't doing much. Let's go to the NASDAQ 100. And for those of you wondering why I'm making such a big deal about this, it's because I'll show you the chart. Not much happening here. We're down fractionally. So the reason why this matters is that, remember, you go back 10 years. I keep repeating this because I don't want people not to remember. I want to keep pounding it into your head. What brought us to the dance? What created this last bull market and the prior bull markets? It wasn't organic growth. It was the Federal Reserve's balance sheet printing money, trillions upon trillions upon trillions upon trillions of dollars that we can't pay back. So if this is what drove the stock market higher, what's going to keep it moving up higher? We're going into recession. So that's why I can't get all warm and fuzzy about a new bull market, because there's no reason to. And the reason why Kyle is even being quoted here is because what he's saying is so crazy on the face of it, in that we've just begun a rate hike cycle. We've just begun maybe fighting inflation. And now the headline is they got to cut rates in the back half of 2023. Think about it. This is madness. But the thing is, he's right. He's right. Larry. Doo-doo! Got me, Larry. Donnie, hey. Hey, Rick. AMD? Okay. Bear market rally, almost out of steam. We'll see. There's a lot of resistance immediately above. So the FOMC minutes yesterday, they say they're going to continue hiking. I believe that they will, but and the only reason why they're going to continue rate hiking is because they want to. They got to They got to hike now so they can give it back at the back half of the year. So sorry, I just had something that was very salty. Um, where was I? So there's no such thing as neutral. They don't know what neutral is. Neutral is what they deem it to be. There's no neutral on the Fed funds rate. Uh, so they're going to do more interest rate hikes only so that they can cut them in the future. Simple as that. And ultimately, in the end, if they don't want to melt down, well, they're going to have to start at the printing presses again because credit is tightening. You're seeing a lot of tightening in the credit markets. I'm trying to make heads or tails out of this. I am totally unprepared for tonight. Totally. All right. Nothing important. Yeah, you can see that odds of a rate hike in July, 50 basis points, is declining. They're still holding firm for June. Here you go. Rate hike expectations. Complete inverse correlation with the NASDAQ. So I'm going to take you back to this. When they roll off debt off their balance sheet, it's akin to a rate hike. It's akin to a rate hike because they're not supporting the bond market as much. So this is a very, very appropriate chart if you're thinking about how you're going to situate yourself over the course of the next several months. Be neutral. If you don't take big bets in any one direction on any one stock, I would suggest getting into options, selling options, generating cash flow off of premiums. What else do we have here? Robobank. If you believe the Fed will pause raking, I think this is a knock. The point is here is that if they do pause, they're right. You need to buy gold, every single commodity in the world, because inflation is just going to rip through the roof. We're going to go over a chart of the US dollar, and the dollar is just coming apart at the seams. In fact, let's get to it. I don't have a ton to talk about here tonight, so I don't want to waste everybody's time. If we get done early tonight, we'll get done early tonight. I'll give you back some time. All right, so bond yields, weekly view. And remember, as I'm going over these weekly charts, these are inconclusive, right? We have one trading day left to go. So without a doubt, every Saturday, I'll go over these very same charts with members. And sure enough, I'll say, remember Thursday night, how this chart looked? Look at how different it looks after one trading day. So the 10-year yield, we're making an effort to try to recapture prior support. It is now acting as resistance. This is a daily chart. Sorry. Let's go to the weekly chart. Third consecutive down week for the 10-year yield, setting the stage for a rally in growth stocks. You see a 3 handle on the 10-year yield, you're going to see everything roll over again. It all comes down to the 10-year yield. Back to the daily chart. You can see that we broke down yesterday, and now we're making an effort. We're doing a retest, trying to recapture support. It's probably not going to work. Now, the PCE report may change that tomorrow if you get a hot number. The TLT, why are these all daily charts? That's why. TLT. Broke so far on the week. The TLT is above resistance, but we have one trading day left to go. And what I like to do when I see charts like this is memorialize my suspicions that this could quite very well be a dead cat bounce, a bear flag. No, NY Jets. No, China's not in recession yet. You don't really know with China. I don't believe their growth rate is really what it's supposed to be, but they're not in recession. Higher probability of a retrace than a continuation rally higher, short term. Agreed. Hi, Bob. Can you look at NN? Sure, Pete. Lily Rose, not yet. What do you mean, not yet? Lily Rose, Costco? Kind of confused. Clarify that if you could. Okay. So TLT, maybe a breakout here. But if we roll over, if this fails, that means the 10-year yield is going this way and equities are going to be going this way. The tip market, very strong week. We are above resistance. This is Treasury inflation protected securities. Daily view. Still in an uptrend here. We haven't really done a really strong higher low. This could be one here, but we need to start breaking out to new higher highs to validate any breakout. Look at volume picked up today. Very nice. And this is what's been lacking is volume. The dollar, weekly view. Gold miners, silver miners, they're not doing anything this week. They're up, but they're not benefiting from the declining US dollar. I'm not sure. Maybe they're waiting for the PCE report to come out. I'm not quite sure what's going on here with the mining stocks, and I'm still concerned about gold. Daily view. Daily chart, new daily lower lows. It's like a continuation breakdown pattern. Stokes are oversold. Volume to the downside, very light. MACD histogram flattening out. We may pop here on the dollar in the next couple of days. VIX, weekly chart, bearish key reversal bar, one trading day left to go. Daily view. A down day. We bounced off at 27, which is pretty good support. Stokes are rolling over. We really need to, if there's going to be a sell-off, you got to keep your eye on the VIX and you got to keep an eye on support. I watch this very, very closely. We still have a breakout on RSI and it's still retesting. So don't count the VIX out yet. Now, to the indexes, the Dow transports, bullish key reversal bar up nearly 5% on the week. We've recaptured one support level. We have some pretty serious resistance above. At 13, no. At around 14,252. Volume this week may come in slightly below average. Daily view. Now, on a daily chart, we're up over 2.75%. But on a move like that, this is what I mean. When you're looking at a move like this of 2.75% or higher, you would expect to see above average volume. You're not getting that. So you got to ask yourself the question. You got to say, self, Why is the market going up? I think it's because you have what's coming up here, a 3-day weekend. You have a market that has been oversold. You had 8 consecutive down weeks on the S&P 500. Uh, a ninth would have been unheard of. And now you're seeing a short covering rally in advance of the 3-day weekend. And we could head up higher. We could see some momentum carry through into next week. But we have a tremendous amount of overhead supply above that's going to require a pullback, a retrace, and a higher low. So as it stands right now, I still have, on the Qs anyway, a short position, a net short. I took some of that short position off today, but a short position nonetheless. We're basically switching the trade to a neutral trade. It's an option strategy. I won't bore you with it. RSI ticking up. So the transports are looking good. We can move up higher. Watch the declining 20-period moving average. That's a natural resistance. Stokes look very good. MACD has not gone positive yet. That's a surprise. The Dow Jones Industrial Average. Now, the first thing I look at when I see this chart, big move this week. We're right at resistance. Volume is probably going to roll in below average. Remember, people are not going to be working tomorrow. They're going to be heading out to the Hamptons. So don't expect all too much action tomorrow. The S&P 500. Remember, we had broken down the week of the 9th below support. We did a retest last week. It's not unheard of to do a second retest of support. Can we break out? Sure. We're not geniuses here, right? Obviously, we're not geniuses here. I can't get my mic off of mute. So what is it going to do to convince us that the markets are done going down? It's very, very simple. It's very, very simple. Rules-based approach. If this, then that. Close above 410 on the S&P 500 weekly chart, or spiders, I should say. And then I'll get all warm and dewy like. But until then, this is a counter trend rally with a lot of overhead supply above. Daily view. We broke out today. Actually, no, we broke out yesterday. I remember talking about this last night on Market Wrap. We broke out yesterday, continuation move up higher. Look at the volume here. This is crazy. Today's volume was lower than yesterday's volume. Yet, we had a higher percentage move. It's bananas. This is not good. So, I know it's better to be in a bull market. It's just better. Even though I don't mind shorting and being short the market, it is better to be in a bull market. Just the easier way to trade. But we need to be honest with ourselves and say, okay, is this a new bull market? You don't use a daily chart to identify whether or not you have a new bull market. At a bare minimum, you're using a weekly and usually a monthly chart to identify a new bull market. We're not there yet. We have never seen capitulation on the VIX. This is one thing that is a big, big thorn in my side. We haven't capitulated on VIX. We haven't gone to oversold territory, which generally marks, not oversold, undervalued territory on valuations, which generally marks the end of a bear market. We're not there yet. Simple as that. We're still expensive. The Qs, of which I continue to have a short position in. I'm not short the common shares of Qs. I sold deep out of the money call options, which I took some off, booked a little bit of a profit, rotated it into some naked puts, balancing me out to far from being overweight bearish on the Qs to more neutral with a bias to the short side still. MACD histogram's looking good, weekly time frame. Oh, this is no, it's accurate. Okay, good. Let's go to a daily chart here. So RSI, continuation breakout, we have higher lows. Good stuff. Higher lows on Stokes. Good stuff. Great price action today, up over 2.75%. But look at the volume. This is a problem. This is not institutional money moving in and buying equities. It's your hedge funds. They're covering shorts. Mom and pop running in, buying 100 shares of the Qs. The banks. Good week. Wow, up over 6.25%. How about Costco's performance announcement? Their performance announcement. They reported good earnings. Are you talking about forward-looking guidance? Nigerian brothers sounded almost bullish this week. John bought. Oh my God, really? He bought the common. Those guys are usually options traders. Added BBY. Could we have an unprecedented rally in this bear market? Yeah, bear markets they're notorious for having huge counter trend rallies, a bear market rally, if you will. So yeah, you can have a rip your face off rally. You know, case in point, let's go back to the Qs, and this is one of the reasons why I had to lighten up on my short. Not that we didn't make money. I was long options on the Q. So we made money on the long side, a good amount of it. But look at this bear market rally here. This rally here was over 17% off the lows. So yeah, we could definitely have a major rally. We are now currently 7% off the lows. So on a relative basis, using this as our benchmark for a bear market rally, we have another 10 points to go to the upside. So I had to make adjustments to my positions or risk having my face ripped off. Technology, weekly chart. Good week this week. Very light volume. Daily view. Look what we got stopped at, the 20 period moving average, but we may have broken out here. So we broke out above a secondary downtrend line. Here's your primary above. I think that we could retrace in the coming days and do a retest of support levels. But the chart looks good. Volume looks horrible. Absolutely horrible. You'll go mad. Bob, I thought SPY was a fake out breakout. I may have bought the puts too soon, expire next week. Yeah, my suggestion to you, Yoga Mac, is that I'll tell you what I do. I can't give advice. If you're going to buy puts, you want to buy enough time. Really, what you're buying is time. So if you want to buy them, try to go out past 45 days, because you could be wrong for the first few days. It's no big deal. You can make it up. But when you're trading the weeklies, the problem is that you don't have time on your side at all, and that's why I like to sell premium, not buy it. So you for all I know, you're going to make $1 million on them, but I would not buy the weeklies. Try to stay away from that because it's a lotto ticket. It really is. How do you handle buying too soon, acting quicker than the market? Um, it's a good question. So I'm thinking both options and common. Um, it goes back to this. If the reason why you bought no longer exists, then you should stop out. Case in point. Let's find it. Let's find an example. And I'm not gonna talk about options because people aren't mostly here for options, which I trade a lot of, but they're here more for um I know what chart to take a look at. Let's go to the small caps. And this was my worst trade of last year. By far. Had my head handed to me on this one. All right. So I went short of IWM here. And the reason why I covered is that we broke out. And it was a head fake breakout. Now suppose you, Yoga Mac, you said, okay, you know what? I'm watching this. Forget about my short. I shouldn't even have said that because it just confused the story. I'm going to buy the small caps because what I'm seeing here is a breakout above monthly resistance after several months of consolidation. This has got to be a moneymaker. That's what I thought. That's what I thought. I said, I got to stop out here. I'm getting killed. This is a monthly breakout. But by the end of the month, what had happened? Bearish key reversal. That breakout failed. So if you bought this breakout in anticipation of a continuation move up higher, the fact that it reversed to close back down below the support level, out. You got in too early. Out. So have your rules set, and it's going to happen. You're going to get in too early, but just identify the reason as to why you got in, and if that reason no longer exists, get out. Simple as that. And that while psychologically the loss is crushing to take, once you press the stop loss button and you see it especially continue lower, you feel really, really good about yourself, even though it was a loser. Why? You managed your risk. This is not a game about managing your profits. We're not here as professionals to say, okay, my goal of the day is to make X amount of dollars. That's what you call stinking thinking. You will go broke with that mentality. The only way to survive in this business is to manage your risk. So that's what I had to do today. I had a very large short position. I was hedged. I made money to the long side. It's not that I lost money today. I made money today. But I had to take that risk off because I had to open my eyes and say, okay, this is not making sense anymore. What made sense 2 days ago no longer makes sense. Therefore, adjust, make adjustments. Simple as that. Good. I'm glad. You're very welcome. Lily Rose. Subscribe, like, yes, subscribe. Hit the like button. Yes, thank you very much. I'm the worst YouTuber in the world. I never remember to do that. Since we're on the small caps, let's take a look at a daily chart. Looks good. Looks really, really good. The volume is horrible. So when I see this, I have to do this. Resistance. How can we continue higher on declining up volume and get through all this overhead supply without volume? You got to have volume. Otherwise, the chart looks really good. Semis, weekly chart. Very nice. Bullish key reversal bar, breakout on Stokes, RSI hooking up. Volume, horrible. Really, really nice chart here. I love higher low double bottom setups on the Stokes. We haven't seen this in a long, long time. Beautiful breakout here. We traded NVIDIA earnings last night. We booked profits on it this morning. After hours yesterday, I bought on the dip NVIDIA and I sold it on the rip today. That was a nice trade. Volume, though, horrible. As usual, I sold it too soon. I left some money on the table here, but we did very well with it. Did you cover VXX already? The VIX I covered, yes. Yes. Thank you, sir. Yes, smash the like button. Appreciate it. All right, LABU, of which we are long. Folks, we've been watching for this for a while now. We've been looking for the breakout on the stochastics, the weekly stochastics, and we're beginning to get them now. Look, it's still massive down volume this week. Daily view. We do have a higher low here. Volume was very good today. So LABU is this is a leveraged ETF putting you along in the biotechs. LABU is looking very good here. Nice. Energy. Clean breakout. Horrible volume. Daily view. Wow. I'm getting the feeling of a blow off top here. Monthly chart still looks good. I think we're near an end here. I think we're going up higher next month, but we may get a reversal bar. We have just blown through the upper band of the rising uptrend channel. Last time that happened was back here on March the 8th, and we retraced to the lower band of support. Look at this volume. I mean, this is horrible. I may be selling naked calls on XLE tomorrow if the implied volatility is high enough. Staples, consumer staples, really good week this week. We booked profits on a Walmart trade. We bought that when nobody wanted it. Very nice. Up nearly 5% on the week. Volume is going to come in. probably slightly above average. That's nice to see. Daily view. We need a higher low. We need a pullback here and a higher low. I'm very impressed that we're able to close above the 200-day moving average. Less impressed the fact that volume was horrible today. Discretionary names, weekly chart. At current, 1 trading day left to go, we are back above resistance. I will bet you a nickel we do not close there. Horrible volume. Daily chart. Beautiful rally today. The declining 20-period moving average is in sight. We broke out on price. Volume, horrible. MACD went positive. Bitcoin, of which we were long. We are dollar cost averaging in. Down on the week. I'm surprised with stocks moving up higher. They actually broke the lower lows today and they rallied back. Wow. Interesting. Emerging markets recaptured support. Now I'm interested in emerging markets. Good. Horrible volume, like a broken record today. Daily view, nice price action here. Very nice. Emerging markets are going up higher. Remember, as the US dollar continues to weaken, it's a tax cut for emerging markets. So that's why you want to be long of emerging markets as the dollar corrects. When the dollar strengthens, you don't want to be in emerging markets. Gold. It's so under pressure. Yeah, we're up on the week, but we still have yet to recapture support. We have, how many got? 2 trading days left to go? Tomorrow and Tuesday? Yes, tomorrow and Tuesday. Daily view. I don't know why it's so weak. I just don't understand the weakness on gold. The dollar's correcting. Gold mining stocks, they're up, but not wonderful. Nuggets up only 2% on the week. GDXJ, these are lackluster performances. All right. Let's go to chart requests. We have 15 minutes left. All right, let me get my notebook out. I know I saw AMD. Yoga Mac, DVN. Rick, I can't go over all those. Give me your top 2, okay? Donnie, HST and LABU. Well, LABU already did. XOM, PO. Okay, you got it. I got you. Got you, Ricky. Donnie, UPST. Of course, Donnie. Anytime, brother. All right. I want to make sure I'm just cutting. Oh, Costco for Lily Rose. All right. So we'll talk about the. I'm going to go to Costco first. And I'm going to talk about the earnings trade we did on. Let's talk a little bit about their earnings. I love the company. So what we did here, the way we trade earnings is that I do not buy the stock before. I don't short the stock before earnings. Nothing like that. What we do is we sell strangles. Now, these have proven to be high risk of late. Netflix ripped my face off. These are not for the faint of heart. So I'll put that out there. We sold a deep out of the money 350 put and sold deep out of the money 540 call options. The bet is that it's not going to get there within the next 30 days. I'm going to be out of this by tomorrow. Why? It's because the options are so very expensive. A lot of speculators, and this is what I mean, Yoga Mac, about buying options, is that you have a lot of speculators that were in there today and they were buying the options. And if you look at this here, current IV percentile is 83%. So when you look at that, and you generally see that right before earnings or when there's a lot of volatility in the market, what that means is that you have a lot of options players in there. They're buying options, they're speculating heavy, they're betting for a big drop or a big rise in a very short amount of time. So what we like to do is we like to take advantage of that, because rarely is the implied volatility ever really seen to the magnitude as to the price of the option. In short, what's going to happen tomorrow is that, given the fact that Costco did really nothing after the close, which is great for me, horrible for options buyers. Horrible. It's the nuclear holocaust of options buying when a stock does nothing after earnings, because tomorrow those options are going to evaporate in value. Why? Because check back in tomorrow and you're going to see this from 83 probably down to 50. That is what drives the value of an option. This is the historical value of an option. At current, Costco is trading at 83% of its high historical value. So this is going to evaporate dramatically tomorrow, and we're going to book profits on it. So their earnings were good. They beat on revenues. I believe they beat on EPS as well. Their Canadian business strong. I don't remember seeing forward-looking guidance. And that may be the reason why they're down in the after-hours session. However, they have bounced back. I was entertaining buying some stock, but I decided not to. So that's Costco. Let's take a look at where it's been. It's unchanged for the most part on the day. So I think that we'll probably trade up tomorrow, despite the fact that we're down at current. Why? It's a great company. So Costco, beginning with a monthly chart, we're always looking for that higher level view. That's why we begin with a monthly chart. And we are holding monthly support. Good stuff. The problem, this, RSI, lower highs, Stokes rolling over. On a weekly view, this is very bad. We broke down last week. This week, got to ask yourself the question, is this an effort to recapture support? And if it is, does it succeed? If it does not succeed after posting very good earnings and the markets begin to weaken up again, that's a tell. There's something wrong there. And we could roll over. I'm not predicting that. I'm saying it's a maybe. Tomorrow, if Costco is done going down, we should close above 4 let's say 468 per share. Where do we close on the day? That was the high of the day. Let's make it 469 per share. If it does that and it closes there in a weekly time frame, all in on Costco, I would be a buyer of the shares. Daily view. Daily view, nice rally here. Volume was very strong today. We did recapture one support level, but again, we have another resistance level immediately above. Now I'm going to overlay. This could be the same resistance level. Overlay weekly. Yeah, it is. Weekly resistance as well. So we want to see a strong close. So I like it. It's got to close above resistance. We want it to break out, close there. And there is the chart. Okay, moving on. AMD. AMD's looking good. Let's go to the weekly chart first. Again, it's a show me stock. You have resistance immediately above on a weekly time frame. I don't think it could be bought yet. It's got to close above resistance. Right now, all we're doing is we are doing a retrace. It's as simple as that. What happened to my sidebar? There we go. Is this a dead cat bounce? I don't know. I'm not that smart. But if we close above resistance, then I'm confident in buying the shares because I know where to put my stop loss, right? But right as we were talking about earlier with Yoga Mac, is that if we break back down below this support level, assuming we close above it next week, well, then we got to stop out of the trade. Daily view. I can't buy it. Weekly chart is everything here. I like it. I think there's a very good chance it moves up higher. If you are going to buy it, I already drew that line there. I would use a stop right below the day's lows. If we close down below the day's lows, out. But otherwise, I think it's shaping up very nicely here. Higher lows. It's what you want to look at. You want a market that's moving from your lower left to your upper right. And we're beginning to see that at least on a daily time frame. AMD looking promising. You want to nibble on it? Go for it. Tight stops below. DVN, energy name. Let's go to a monthly view. A lot of support levels below, and I did not draw these. Folks, we're using TrendSpider, automated technical analysis, 35% discount code below. A beautiful breakout this month. Beautiful. It's going up. What can I say? It's going up. New higher highs. RSI rising. Stokes, a little toppy, but there's more room to go. I would not initiate a new trade here. I would not initiate a new trade. You have too much resistance above. We broke out today, but we stopped dead at these two resistance levels immediately above. Be careful here. And if we close down below this rising lower band of support, then it's all over for Devin. But right now, it still looks good. You're nearing the apex of a rising wedge formation. You're either going to have to blow out of this on high volume, or you run the risk of breaking down here. So be very, very careful. Watch your volume bars. I would not initiate a new trade. It's way too long in the tooth. HST. I've never looked at this chart before. This is the value of TrendSpider, folks. Automatically. We are in a rising uptrend channel. Within that rising uptrend channel, here's your upper band, your lower band. But within that channel, we are now in a bull flag setup. If we break out above this upper band of resistance here, you got to buy this stock. I'm not getting in. I got in over a month ago. Oh, good for you. Good. I asked you on here, and you said retest at 60 would be a good entry. Good. Good. I'm glad. Very glad for you. Thank you for the acknowledgement. I really appreciate that. I liked it as a long-term hold. That was commonly most, so I nibbled. Okay. You made money. That's all that matters. Okay. XOM. These energy stocks are so extended, but they're going up higher. I'm not going to be a bear on them. They want to go up higher. It's a doji star formation today. It's a breakout on a doji formation. We'll take the breakout, but just beware of that doji star formation. Doji star formation, when you see it, it's kind of a sign of indecision. And when you get one on light volume like this, that's not good. That being said, this is a daily chart. So when I look at a daily, this is why I usually start with a weekly or monthly chart, because I don't want to get caught up in the daily gyrations. I'd rather take a look at a weekly chart and say, okay, what are we doing from that higher level view, that macro view of the battlefield? And the higher level view is telling you, you got to be long this stock. Now, if I was a short-term trader, which I am, would I initiate a trade here? No, definitely not. Would I short it? No, definitely not. But longer term, if I were an investor, I had profits here, I would just raise my stops right below this lower band of support here. Break through. And out. Simple as that. PLTR. I'm not going to start with the daily chart. All right. I wouldn't buy it here. You got to wait. I know the stock has been killed. I don't know anything about the company. The daily chart looks good. I have the weekly chart here, daily chart here. It's firming up. It's putting in higher lows. It's still in a downtrend channel. I think that if on it for spec, if you wanted to buy it, fine. Just use a stop loss right below this lower band of support here. No, no, more bad news for PLT. Tell me it's going. Oh, you own it? Okay. Uh, it's a broken stock trying to find a bottom, and it's very difficult. Hey, Bob, quick question. Do you think the 3D stocks will come back around? They got crushed. Um, I don't know. I'm a technician. Yeah, I trade options and I watch charts and I trade stocks. What the businesses do, you know what I do? I defer to my guru, Investors Business Daily. When it comes down to fundamentals, I just go here. I outsource my fundamentals. So I don't know, Yoga Mac. I'm not that smart. I wish I were. So I think as a trade here, high or low, if you get a break above, I can't see 870. Is that right? 870. Uh, you can buy it, but I would stay very small here. Weak stocks tend to get weaker. For stock like this, you'd be better off. I don't know if you trade options or not. You'd be better off selling a naked put deep out of the money and just generating premium on it. I don't know why you want to fight this. It's clearly in a downtrend. Can it go up? Yeah. Can it go down? Yeah. It's just not a good swing trade. It's just not good. There are better quality names out there. Uh, I'm going to uh, I'm going to unload my Netflix. Any more thoughts? I got long today. Call spread long of Netflix because Netflix broke out. Why'd you sell it out of curiosity? Here you have an inverted head and shoulders setup: left shoulder, head, right shoulder. Here's your neckline, and we broke out above that neckline today. So I'm just curious about why you sold it. Have you been long of it and now you're just tired and you're capitulating? So I would be interested in why you sold it. You've been selling puts. They got filled long ago, and covered calls are getting filled now because there's. All right, so I got to do a video on this about you know I got to do a video on options. I've been putting it off because I can get too long winded. I got to figure it out. But that's the way I would trade this. I'd be selling puts on it. I would check the short interest, make sure there's not a huge short squeeze potential. If there's not, I would sell strangles. Like if on YouTube. Yes, thank you, Yoga Mac. All right. Let's bring this to a close. We're over. So I forgot who said about Netflix. Anik, let me know why you got out of Netflix. UPST. Oh, this is Upstart Holdings. I hate the weekly chart because it broke down trying to recapture. I can't buy it here. I love the daily chart. So what I would do is this. What's the price point? 54.74. It broke out today. You have your VWAP right here. I think that this could be bought tomorrow, assuming that it stays above this resistance level. I'd like to see a retest. But beware, up here at around 54 bucks a share, you have a lot of resistance above, as noted on this weekly chart. Even lower than that, to be honest with you, 48. So I would not be an investor here. The only established trend here, and this is where people make a lot of mistakes when they're trading bear markets, is that they're hoping for the bottom, and hope is not a strategy. You have to go into every single trade with the assumption that the macro trend. What's the macro trend here? The macro trend is clearly down, right? And weak stocks tend to get weaker. So if you ask me, hey, listen, do you think there's a higher probability of making money to the short side on UPST or to the long side on UPST, even though it broke out today above resistance? I'm going to go with the short every single day. The reason is that we have a ton of overhead supply. The trend is still down. Every time you hit one of these major resistance levels, you're going to see a guy that he bought, he's regretting it. He's got buyer's remorse. All he wants is his money back, and he's going to sell into any strength. For the damage that's been done, and not just UPST, it's not the poop on UPST, for the entire stock market, you have all these kids that got stimmy checks annihilated. They ain't never coming back. And if they can get their money back, they're going to get their money back. They're not looking to make money anymore. They just want their money back. That's the problem with overhead supply. That's the reason why you need a capitulation sell-off to wash out the final weak hands. We haven't seen it. Yeah, Talon, it's so complex, and it's got to be gamified. And I'm working on it now to try to gamify it, to try to illustrate options and not to make it too complex. So, because I think that if you're not knowledgeable on how to sell premium, meaning sell options and not buy options, how to be the casino and not the gambler, you're leaving a lot of money on the table, a tremendous amount of money. I mean, you buy a stock, if you buy UPST tomorrow, 50-50 chance it goes up or down at best. But if you're selling premium, deep out of the money calls, deep out of the puts, your probabilities are far greater of making money. It's sickening how much more you're going to make. Granted, your upside is muted. However, your consistency of profits is it's just no. You're a member. You know exactly what we do. I would love to do. I will. I got to again. I got to gamify it, Bob. You should do an AMA session. Ask me anything. Ah, all right. That's good. That's an interesting thought. I like that. Chance you could do a 1 minute on Tesla rip today for you, Falcon? Sure. So it's up on the week, still below. Is it still below? Yeah. Oh no, it's slightly above resistance. Daily view. This is still a very expensive stock. Before I got into this, I would need to see a retrace and a higher low. So it would need to go higher. I would not be a part of it. Then a pullback and a higher low. That way I can have a little bit more confidence that any rally is sustainable. And I would stay small in that initial buy, and I would add more on a breakout to a new higher high. All right, guys, I'm over. I have a Pete, and then avoid. It's broken. Not catching any bids. It's underperforming a weak market. I would avoid this. The one good thing here is this, is that we broke down below this lower band of support. We recaptured it today. You may get a pop here, but it's underperforming the market. I would be very, very careful. Take care, Yoga Mac. Thanks, Bob. This one's volatility makes my stomach ache. I got you. I bet. Okay. All right, folks. That's it for this evening. Thanks for being here. Everybody have an awesome, awesome Memorial Day weekend and have a profitable trading day tomorrow. Members, I will talk to you tomorrow and the weekend. And I hope to see everybody on Sunday Night Futures Live. See you then. Oh, actually, Monday Night Futures Live. See you then.